Welcome back, everyone, to a special session. We'll be having our rescheduled week 3 of GenesisChain webinar series. Let's just have a quick recap. Um, so last week we had Gaurav Saroj, who gave us a phenomenal deep dive into Web3 and the decentralized future. He explained how this new internet economy is allowing users to gain ownership through smart contracts and detailed the advantages of DeFi, which is decentralized finance. We're also covering the essential topic of researching risks before investing. Before we get into today's session, Genesis Chain, I just want to talk about Genesis Chain, where I want to emphasize how it is completely free, 8-week gateway to practical blockchain education from the top industry leaders. If you missed any session, replays are always available on our YouTube channel. And also a big thank you, as always, to our valued sponsor, MTutor, for making this educational series possible and free for all. Their platform offers fantastic resources. Make sure to visit their website and check it out. Now, on to today's critical topic, the digital gold, cryptocurrencies. Introducing our speaker, Bob Sackdev, an AI and business transformation consultant with over 18 years of experience helping SMEs and enterprises leverage AI, automation, and digital strategies to drive growth across Asia, including Thailand, India, Australia, and the US. He has led successful digital transformation, blockchain, and ERP initiatives across manufacturing, education, retail, and textile centers. We're thrilled to have his insights on the intersection of global relations and technology and the cryptocurrency knowledge he has. Please join me in welcoming Bob Sackdev. Thank you.
Hi, everyone. This is Bob here. Great to join. Thank you for GenesisChain for inviting me. Today, I will talk about blockchain and cryptocurrency. Let me share my screen. Can you see my screen?
Yes, sir. It's visible.
Okay, so let's start. Digital code, understanding cryptocurrencies. This is a third weekly session for GenesisChain, and key topic is exploring the future of finance. A bit about myself. I've been running my own IT consultancy for last 18 years. I'm based in Bangkok. I help organizations leverage AI, with digital transformation, blockchain, and emerging technologies. As managing director of PSP Solutions, we help SMEs, enterprises on strategy, automation, and data decision making. So let me start what we will learn today. What we will learn today is 3 topics. What is blockchain? How is it different from cryptocurrencies? We understand the fundamental differences and how they work together. Second topic is digital wallets and keys, the essential tools for securing and managing your digital assets. And the third topic is real-world applications, how cryptocurrencies are used in businesses and finance today. Okay, let's understand the difference. First, blockchain is the underlying infrastructure. It's a distributed ledger technology that records transactions across multiple computers. Think of it as the foundation or the operating system. It's a decentralized database. It's immutable, meaning your records are permanently kept there. No one can edit it or delete it. and it powers many, many applications beyond cryptocurrency. Cryptocurrency is an application built on blockchain for digital money that uses cryptography for security. It's just one use case of blockchain technology. It's in a digital form of currency, and you can do peer-to-peer transactions without going through a centralized exchange. And these are one of the many blockchain applications. Let me give you a brief understanding. So how does cryptocurrency and blockchain work? Case in point, Mr. A is sending some cryptocurrency to Mr. B. So Mr. B gives his wallet address to Mr. A, and Mr. A makes the transfer. While the transfer is going on, the blockchain checks if the transaction and the wallet ID is confirmed, and then everything is okay, the funds gets transferred, right? So this is it's a layer of, it's also a security layer, and it has a lot of privacy. A real world case example that I can compare with cryptocurrency is like credit cards. Suppose if you are going to a store and you make a purchase with Visa, they take your machine, they take your card to the swipe machine, they swipe your card, and the card goes to servers of Visa to confirm that the card is valid, there's balance, everything, and then a transaction is confirmed. So Visa, Master, all these credit cards do the same thing, but it's centralized, and it's based on internal company private knowledge, right? So what cryptocurrency does is same thing. It transfers funds from one wallet to another, and it uses blockchain to confirm. It doesn't use a centralized platform. Okay. The relationship between these two is, you can say the blockchain is a foundation layer, right? It provides security and transparent infrastructure. Protocol layer is a layer on top of that, where you have smart contracts and other tools that are built on top. Application layer is a cryptocurrency used as a value exchange mechanism. Say you want to use, if you purchase something online and that platform accepts cryptocurrency, so we are using cryptocurrency to make the payment. And then when you make the payment, it goes through a protocol layer to confirm that the payment you made, your wallet, your transaction is valid. And it goes to the blockchain to confirm the transaction is done, right? Blockchain can exist without cryptocurrency. There are many uses of it, but cryptocurrency requires blockchain. Digital wallets. This is a very important function. So your digital wallet is where you can keep your currency. There are two types of wallets. Public wallets, like say in exchanges, your wallet belongs to say Binance, or you have your private wallet. A very popular wallet is MetaMask. Okay. Now, you don't have in cryptocurrency, you don't have account number or email address. You have a public key. Public key is given to you for each type of blockchain currency, cryptocurrency. Suppose I'm using cryptocurrency that uses Ethereum. They will give me, the wallet will give me a public key to that wallet so people can transfer money there. But if I have another currency, Cardano, suppose, that'll be another public key. So we have to keep track of all our public keys Public keys is not so uh, the more the more your wallet is address public keys with people, the better. But private key is like your password. It's normally a series of words, right? In case you lost your password to the wallet, you have to enter this private key. Private key is very essential. You should print it out or even write by hand and store it in a safe space. Because if you lose your private key, you can lose your access to your cryptocurrency forever. There is no forget password like in a traditional way that you can recover passwords. So public key is your account number and private key is your password. Okay. Never ever share your private keys with anyone. It's really not advisable. Okay. Types of wallets. Hot wallets are wallets connected to the internet, mobile and desktop apps, convenient for frequent transaction, more vulnerable to hacking, best for small amounts. I use hot wallet. I use MetaMask to do transaction. It's a plugin on a Chrome browser. Okay, so I have to log in, put in my username, put in my password, and I can use it. There is chance of it getting hacked. Then you have cold wallets. These are hardware wallets. They are totally offline. The hardware wallets look like a thumb drive, a flash drive, and your currency, your private keys are kept there, right? So once you plug it out of a computer, it is not connected to anything. So it's very secure. The third one is custodial wallets. Custodial wallets are wallets you can say that are issued in exchanges, right? So if you have an account with Binance is hosting or keeping custodial of your wallet. Okay, it's very easy for beginners. You can't do much control, but it's also subject to platform risks. I use a custodial wallet in my country. There is an exchange that is fully verified by the Security Exchange and Finance Ministry called BitCup. So I use that, and I use hot wallets. I do have some savings that I have, some tokens that I bought that I never plan to trade. So I use that and I store them in cold wallets. These are the various types of wallets available out there. What are real world use cases beyond speculating on a cryptocurrency? Cross border payments. You can send money globally in minutes with hardly any fees. You are bypassing bank and it's very fast. I give you an example. I had to send $10,000 to somebody in India, and I use the USDT, which is a stable coin, which is forever $1, and I sent him money. $10,000 reached him in 2 minutes, and for $10,000, my fees was like about $1, not even $1, 90 something cents, right? So it's a fast, easy, cheap way to transfer funds globally. Okay, e-commerce, um, accepting crypto more and more nowadays, right? So it's the same thing. It's low transaction fees, and merchants don't need banks control. It goes directly to their wallet. The last one is financial inclusion. We call this DeFi or decentralized finance. There are a few in my country, three banks have been given a digital license, meaning there is no physical location, there is no staff that you can visit in a counter, right? So the transactions and records are kept in blockchain for secure purposes. However, these banks do not offer finance yet. So there's some uh, exchanges where you can go and you can pledge your token and take a loan against it. So they call it definance, right? Uh, it's good for digital banks that use blockchain. Is very good for people in remote areas who banks are very far. And as a user, as an interface, you don't know it's a blockchain, but the underlying layer is blockchain. So you can open accounts, deposit funds, and some platforms also give out loans, right? So these are some of the real world use cases for uh, blockchain. Sorry. Enterprise applications, supply chain management. Basically, if you want to keep track of where your products are, where your parcel is, and each stop of the supply chain, there is an entry that is made into a platform that stores everything on a blockchain. It, it ensures authenticity, it reduces fraud. So the users who are using the supply chain will know exactly where his product is. And again, as a consumer, you don't need to have a wallet or anything. You just do your normal workflow on if you're in a supply chain, but the records are kept in a blockchain. Okay, smart contracts. Smart contracts are contracts made to automate certain financial uh, functions, like say if you want to deposit, if you want to stake some cryptocurrency to earn interest. So when you put your cryptocurrency for staking, the smart contract is triggered to calculate your interest. Okay, so these are automated agreements. In real estate, people use for um, issuing. Some countries have started doing all a real estate transaction on smart contracts. So there's no fraud, and everything is verified and secure. Insurance are using it also for documents, keeping in control. And the last one that I was mentioned before is DeFi, lending, borrowing, and earning interest without traditional banks. It has really shot up in a locked value. So basically, there are platforms who work as a online bank, but the underlying technology is blockchain. These applications demonstrate that cryptocurrencies and blockchains are reshaping how businesses operate, creating efficiency, transparency, and new economic opportunities. The key takeaway today is blockchain is a foundation, cryptocurrency is just one application of blockchain technology. The infrastructure is far broader and to be used for business and to help the society. Digital wallets make everything secure. Your private key is your responsibility. You can never recover your private key, so you should never share that with anybody. And the real value is beyond trading. Cryptocurrencies are solving real world problems today, from remittance to financial inclusion, enterprise efficiency, and the technology is moving rapidly. The technology is moving so rapid, a lot of things that we assume are day to day normal business flows or whatever, they are actually happening on blockchain. Okay, gentlemen, that is my presentation for today. Thank you very much.
Thank you, Bob, for the incredibly insightful session on cryptocurrencies and DeFi. That was truly amazing. We're so grateful to our audience for joining us today. We hope this sparked new ideas about the broader impact of this technology on the world stage. Don't forget to join us next Saturday for week 6, where we'll be diving into the essential topic of careers and responsible engagement in the blockchain space. So, thank you. Thank you for joining today, and we'll hopefully see you next week. Goodbye, everybody.